Good morning, folks. I'm reporting to duty late today. The time is 7:59. It's 59 minutes past 7, 59 minutes past midnight New York. So let's look at price. Looking at the 15-minute chart. So yesterday we had CPI. We had this run higher throughout CPI and run into the new week opening gap. And then I explained what happens in CPI, and then going into the index futures open at 4:30 my time, 9:30 a.m. New York. We had this consolidation here going into the close. Very poor price action. So I don't care about that. So let's look at price today. I'm looking at this momentum here. We're trying to go higher. One thing to note is we're trading around this new week opening gap. So it's possible for price to start trading into the midpoint of this new week opening gap. So even though we are having higher prices and it's trying to push higher, we can overrule this momentum here and start trading back into the new week opening gap. So right now it's 8. We've started a new 1 hour. So we're gonna go into the 5 minute and look at what we have in terms of tape reading and in terms of looking at price. So if you look at this 5 minute chart, there are inefficiencies that are very salient that I'm interested in looking at. One of them is this CB here. It's so obvious, and then we have this inefficiency here, this BC, and then going back we have this BC here, and then going back we have this bigger inefficiency here. So we opened up in Asia right here at 2, and then started trading higher. Of course, we trade into this new week opening gap, and especially the midpoint of that new week opening gap, and you can see how this candlestick here, that is just 3, we open up, makes this low here, and then pushes higher into making that close right there after trading to the midpoint of that new week opening gap. So we went higher, and then we had this retracement back to refill this inefficiency here, and look at the bodies, they close inside that inefficiency, and then it trades back again to the midpoint of the new week opening gap. Beautiful, right? So after that comes back higher, trades to the top of that new week opening gap, and right now we are up here. So the momentum is bullish. Where can we be reaching into if we are bullish? So go back to 15 minutes, and then my interest is this high here. So that's a clear form of buy side above that high, and then if we surpass that, then we'll be trading to this high here. So just to mention, we have PPI number today, and it's PPI is very unpredictable now that we had CPI. We'll try to stay in front of the charts with PPI number, and we'll see what we have. So I'm looking at price to start trading to that high, and then if possible we'll start trading into this one. So back to the 5 minutes. So my interest will be, how do we trade after we trade into this high? So we also have that level there. That's a premium array. That's that midpoint of this week. I've mentioned the midpoint of this week here for days, a lot of days. That 807.71 level, I've mentioned it a lot. So leave alone that 807.75 level, we have that buy side, and then we have that one if we keep up with the higher prices. So my interest is this CB here. We went lower, we went through it, and now price is using it as a support mechanism to start offering higher prices. So that buy side is at 798, that's around 800 level. If I want to get 20 points to 800, then I will be interested in buying it at 860. That's simple, right? So right now it's difficult for me to be buying it, even though we know we can trade into that buy side and maybe head into that 807 level. but I want to be interested in how price trades after we trade into this buy side liquidity pool here. So I've mentioned this inefficiency here. That one right there. And I've mentioned this one here. This BC. I'm gonna use light slate gray. And I've mentioned this one here, but this one will be interesting to me if we start trading lower. So my interest is a lot on this inefficiency here together with this week, the midpoint of this week here. That's of interest. So if we trade into this buy side here and maybe touch that 807 level, we might be turning lower and trade into the new week opening gap. So that's why I'm not really interested in higher prices right now. And I'll be very careful when we start trading lower. I'll be very careful with what price has an interest in. Remember, the bias is bullish, the momentum is bullish. So we're looking for it to start trading into these highs. But due to these factors that I mentioned, the current new week opening gap together with these inefficiencies, we might have price start to run into that new week opening gap, because majority of the time it acts as a magnet to price in whatever state it's trading in. So ideally I want to see it trade into that buy side and maybe start to trade lower in this new week opening gap. So these are one of those days that I'm expecting a turn in momentum. We've had a turn in momentum from like 2 or 3 days. The days that I can remember very well are two. During this week, we had a change in momentum on this here. That is on Tuesday. We had a turn in momentum right here. And then the other day I can remember is last week, but one on Monday. Yeah, right here where we trade into this new week opening gap on this 1 hour. So this new week opening gap can act as a magnet in price, and I'm not really in a hurry to go into longs to look for prices, though the momentum is bullish. So with that all said, let's watch and see how we trade into this buy side, probably into this 807.71 level, and then we'll see whether we'll start trading into this inefficiency and probably into this new week opening gap midpoint. So we can obviously see prices keeping up with the higher prices. Now that we made this high here around this was 710. So I want to get the midnight new opening price, and it's right here. That's why my interest got into that inefficiency. Midnight new opening price is right here. So I'm not really going to annotate that price point because that inefficiency in itself, it's sufficient enough. So we've had this run lower back into this inefficiency down at the low of this candlestick is 773, and then we've had this push higher. We're trading at 794 now. So I'm looking for it to trade into that buy side, that old high here that we had yesterday at 23. That's with the market on closed macro. So this week in itself is very important, and it's a telltale sign of narrative. So if we measure this week, because there's a gap also and it's very prominent, I'm not going to annotate that midpoint, but you can see the midpoint is right there and the low is right there, almost on the New York Open on Monday. So as we were trading here, you can see we had this run lower and then we had the push higher here. And where is it trading now? Into that buy side. So the midpoint of that week is 29,780. So we've run into that buy side. So that candlestick's high is 29,797.74. That is 797. That's around 800. So we're trading at 796 now, and I want to see it push through that and trade into that 807 level. So the midpoint of this gap here is right there. It's right there on the open. Now that we have the midpoint on the open, let's annotate that opening price. It's not exactly on that open, but just annotate this midpoint there. Right there, and then let's push this forward. Let's push it a little more. Yeah. So you can see the midpoint of this inefficiency, however small it is. We had it here together with the midnight New York Open. Started running higher after trading into this one. And then look at the bodies here. They find support on their proportion of that inefficiency, start trading higher. Bodies start trading higher. What does it reach into? That high together with the buy side right there. So that buy side is 797. This candlestick high so far is 799. So this here is out together with the spread right there. So we've had that 750 macro come into the marketplace right here. We pushed lower into that inefficiency, touched the open, and then start trading higher. So Asian high right here, and the Asian lows right here. Now you can see where we're trading into higher. We're trading at 800 now. So that buy side liquidity is out. I'm expecting price to start trading to this one now. So I want to see it trade into that 807.71 level, the midpoint of this is last week's on it was on Wednesday. Today is Thursday, so Monday, Tuesday, Wednesday, Thursday. Last week on Wednesday, that midpoint of that week is that level, and I want to see price start trading into that. So there are also some days that price does not really have an interest in retracing, and they just trade higher throughout the session, and this day can be one of those. So you can see here we've traded into that level. The candlesticks, this candlestick's high is 807.34. So we've touched that 807 level. So that buy side level is 824. You want to be anticipating 824. You want to be at buyer at 800. Now we're trading at 805. I'm anticipating price to start drawing lower possibly, and we'll be looking for a buy around 800, that 800. So you can see how it's trading from that 807 level. It's very interesting. It's beautiful. So the buy side that we're remaining with is this high here, and this high is yesterday's afternoon session's high. So this high here is coupled up with these highs. You can see that they're relatively equal. So my interest is the highest high, and is this here, and that is that 824 level. So that's a nice push through to 812, 811. So we're going to trade into that 824 level. So we start a new 15-minute candlestick. Let's look at a 15-minute chart here. Look at this 15-minute bullish prices. Midnight New York, we have this inefficiency here. I've mentioned where I wanted to see it trade into, the buy side here, and most importantly, that high. So if we start trading lower, softly, well, when I expect it to trade into that 800 level, and then we'll be looking for a buy around that 800 and start looking for an interest into that liquidity pool. So normally my trades are around that 805 level to 810 macro, and you can see this candlestick is 755, and this is 8, that is 805. Very interesting, and we're trading at that 808 level, around that 800 level. It's interesting that buy could have been at 800. So I'm still not late. I'm still expecting to kind of like trade lower and refine to that 800 level so that we can start pushing into that 824 level. So we've opened up this candlestick here at 15-minute. We pushed it. The high here is 817. That's nice. So uh, what this is referring to me is, now that we've had CPI and PPI number today, CPI yesterday and PPI today, majority of the momentum from Monday is kept to facilitate that CPI number. The news in itself does not really make sense if you start following the fundamentals to that news. If you start crunching up the numbers, normally they don't make sense, and it's just a lot of work, and you can just use the technical analysis to predict price. Simple technical analysis just enough. So this market are 100% manipulated, and the news do not really have an impact on whatever price is going to print into. So if the market are going to go higher, they're going to price higher. So I think we're remaining around 2 minutes, and then we're going to close with this candlestick here, and then we're going to have an inefficiency here, and that inefficiency here is going to be important. So I'll change the color of this inefficiency. This is supposed to be olive drab, and then the inefficiency that we have here is going to be, it's not, is it Cadeblo? We'll see. So I want to see it push directly into that 824 level. That will be a nice um, a nice run into that level. So we're trading at 806, around that 807 level. So we've closed that candlestick. I was waiting for that close, so I'm interested in this inefficiency here. Yeah, it's light sea green. Let's just use the cadet blue. Yeah, looks better. So we've traded into that 807 level. We've not touched anywhere near that inefficiency. And you can see it's pushing higher. Typical bullish market. Down close candle here pushes higher. They're relatively equal highs here from yesterday's session. This high here, this candlestick is 1745. That is the silver bullet hour. That's the 10 o'clock hour in the New York time. And the candlestick high is 824.04, and this high is 824.04. So those are equal highs, exact equal highs. So what's that? That's buy side. That buy side liquidity. So it's gonna push into that 824.04 level and pass through it. So this is post CPI, and it's the PPI number, and you can see this pre-London here. It's beautiful. It's just what I expect on momentum. It's just that I came on late. I could have caught a buy here around that, around 780 or 800 level, and maybe expect that 820, and most importantly that 824. Those are equal highs. So those are legitimate buy side liquidity. So trading at 812 now. So I was expecting something like a retraction here from that high that we've just formed here. This candlestick is say 817. That's 817. I'm expecting price to start trading lower and maybe come low and make reference to this candlestick here. That's a bullish order block right here. Now that we trade into the upper portion of that inefficiency, and it's right there on the opening price for the New York session. That's an order block right there. So it will come lower, make reference to that price point here, and never trade to the midpoint. That's bullish. And I'd be expecting that inefficiency to act as a discounter rate to push price back up into this high. That can only happen if we don't trade to that high. If price comes back lower into this inefficiency, this candlestick here, and trades to the lower portion of that candlestick and goes way beyond this inefficiency, then those are two PDRAs that it has crossed, and that's something that I don't expect. So if it does that with the bodies, then we'll be expecting price to run into that new week opening gap. So most of the time you want to be using like two reference points with or two PDRAs to make a point. Like when I mentioned this inefficiency here, I also mentioned this PDRA with this week. So those are two PDRA that are gonna support price. I've mentioned this inefficiency here, and I've mentioned the midnight new opening price. That's an important price point. We are trading on the upper point of this. This is where we opened up this week. That 0 GMT level. That makes that premium new week opening gap and is also an important level. So all those points, reference points on price action, they are important. They're important in tape reading price on whatever it's gonna do, whatever it's reaching for. And you have to know these things by listening to the smart money concept that ICT teaches. And if you couple up with momentum with this time period here, that pre-London, the momentum is usually very nice. So we've traded lower this candlestick here. We've touched the top of that inefficiency, and this to me still is bullish. So you see these 2 weeks here, I want to see price run through them. If we are really bullish like that, see that reaction, I want to see it now run to that buy side without hesitation. There we go. We've touched that 817 level once more. We're trading at that once 817. So I want to see that 820 level and 824 buy side. So if it fails entirely and start to trade lower, then I've already explained what I expect of price. If we trade through this inefficiency here, my interest will be back here. How do we trade with these two PDRAs? But right now, what I'm expecting is just a run higher into that 824 level. So we're stuck around that 814, 815 level. We're gonna open up a new 15-minute candlestick in the next 3 minutes or so. And then we're gonna see, does it have an interest to trade through that buy side? Or price can reach so close into that buy side and then not run to that buy side first. Maybe have a retracement and then maybe run that buy side later. We can absolutely do that. Now that we're trading at the time is 8:28. Now we are running 2 minutes or so to start that 15-minute candlestick. We have that 8:50 to 9:10, that candlestick that welcomes in the London Open. We can use that macro to run into that buy side. If price does not run that buy side now, we can entirely have a retracement and then run that buy side at around that 8:50, 9:10. So we're trading at 815. It's still keeping up with the higher prices. I do not see any reason for price to start trading lower now, unless it trades higher into that 824 level first. So we've opened up a new 15-minute, and look at where we've closed on this 5-minute candlestick. We closed up on the high. So this is bullish. So I want to see a huge wick, or let me mention it. I don't want to see a huge tail. That's just enough. And then I want to see it run high into that 824 now. So 818, we've touched 819. Now back down to around 815. So I want to see 820s. So we are still stuck at 818 and 817. So I guess it's waiting for that 850 macro, because it could have done that right here on this candlestick here, but you can see it's not really having it. So we're back down to 807. So we've touched this inefficiency here. This inefficiency to me is important now that we've gone above this buy side, and we are also trading around that 807 level, that midpoint of last week's Wednesday, that this week here on the daily chart right here, that midpoint of that week, very, very salient, because in this run higher, this is the highest high, and in this month, now that we opened up here, this is the highest high. So that week of that day, and together with the fact that there's a swing high, higher high, lower high, that's important. So I'm gonna put that fib back right there. So we're back down to that 807 level. I want to see a more retracement, a more mature retracement lower. I want to see price go through this inefficiency here, trade back into this order block here, and then going into 850. I want to see price make a turn here and start headed into that buy side, and that is what I'll be doing. But price must give me the characteristic that I'm mentioned here first, and then I go in on a buy. If it does not do whatever I'm expecting here, then it might as well run into the midpoint of that new week opening gap. So we've gone through that inefficiency here with the week, and this can be all it does, and then start running into that buy side. So I think we've made a reference to 800. This candlestick's low is the low 898. Wow, just wow. 898.00. So we've traded into 800 together with the spread. My spread is 2 points. If I had a limit order on buying around that 800 level, that could be an entry right there on that buy. And look at where we've closed with this candlestick, that 807 level, right? So you want to be bullish. Now that we have this week here together with that inefficiency, the midpoint of that week together with this midpoint here, I don't want to see price spend a lot of time on that PDRA, and that PDRA is the gray area. So we have again two things going with this PDRA right here. So if it wants to trade back into this order block, I want to see it go to this week, trade lower, and then come back into this low. But if it wants to trade into this buy side the way I'm expecting and anticipating it to, I want to see higher pricing and back into that 824 level. So we're back down into that gray area that I've just talked about. The midpoint of that inefficiency in cadet blue and the midpoint of that week, that tail that we've just formed. We're trading right there, and it's keeping up with lower prices still. So with the fact that it has done this here, that 800 level is not really as good of a sell as it is. So we're going through that inefficiency. We've gone through the midpoint of that week. It's right there. We've gone through that, and we've gone through the midpoint of that inefficiency. So that's the gray area, and we've gone through it. So that's a reflection of lower prices. And what I want to see now next is right here. Do we see a change in momentum on that order block. If we trade to that, we pulled higher. So don't forget the bodies are the ones that are to tell the narrative. So still, if you look at this here, look at where we closed. That midpoint of that week, that tail is 803.06. This closing price is 802.87. So it's so close to that midpoint of that week. And this midpoint of this inefficiency here is 801. So that 802 level is that gray area that I've just talked about. So we've not closed below it, or that's a mistake. Not supposed to do that. Let's extend this out to then we delete this fib. So we've gone lower. We're still trading around that 802 level. We've touched that 807 level, and now we are inside that inefficiency. So I also talk about how we expect price to trade inside inefficiencies. I do not expect price to spend a lot of time in inefficiencies if it's gonna be straight up bullish, or if you're weak, bearish. If it's spending a lot of time inside inefficiencies, means you have to wait for it for a couple of 5-minute candles. So we formed these inefficiencies. This inefficiency here in candle blue went higher. This candlestick high is the highest high here, and that is 819.75, and then we've had this run lower. So the momentum is still bullish. I've not given up on higher prices, but it could be best if we start trading lower back into this order block here, and then show signs of bullish prices. So far, it's right inside this inefficiency. We've not closed below it. We've closed right there on the midpoint. So we're gonna see where this candlestick has an interest in. Best case scenario, if we go through it and close on the low, my interest again, I've talked about this bullish order block. So if we've gone through that inefficiency, that one, if we go through this PDRAs here too with the bodies, then be rest assured we're gonna trade into that New Week opening gap, mid gap, come the New York Open. But if we find support on that bullish order block and that inefficiency, then that buy side still is of interest. So price can make that high here, and maybe that price, that buy side here, and those relative equal highs can be of interest to facilitate prices in PPI. That can exactly happen. And this can be just an inversion fair value gap to facilitate lower prices into this new week opening gap. Now that we've not reached into that, if you look at 1 hour here, that high and that high that we've just formed here, those are relatively equal, and price can trade lower into PPI so that it can trade higher after that PPI number is out to take that buy side. So the time right now is 8:44. We are remaining with around 6 minutes, and then that 8:50 that facilitated the London Open comes in. So we're trading on that 800 level. So we've closed on the lower portion of that inefficiency together with that wick that formed that swing high. So that gray area, we've gone through it. So I want to be interested if we trade into that, whether that does it have some form of reaction. The bodies are still inside that inefficiency. So you can see how this candle here is behaving. We've touched the midpoint of that. Let's actually take the midpoint of that inefficiency. I'm just talking about it. Right there. So you can see we are touching it. The bodies are still inside that inefficiency. So this, I'm still with the bias that we're bullish. So we've been trading higher. We've had this retracement. We go higher, retracement, lower. We've gone higher. There's a buy side liquidity pool here. We've had this retracement here with price trading into this inefficiency. We can still anticipate higher prices. And actually, that's what I'm kind of like anticipating for price to do. So I'm going to buy that 800 level. Or let's just wait for that 850 macro to come into marketplace, and then we're going to see. Not that we are spending a lot of time in this inefficiency. I want to see it come back a little bit lower, maybe run into 780 to 9,780. It's inside this bullish order block, then we'll see higher prices. So we're remaining with less than 2 minutes. Let's look at a 15-minute here. So that 800 will be a very nice buy. So we're remaining with less than 1 minute. There we go. We've opened. And look at where this candlestick has closed on the lower portion of that mid gap. So this is still a little bit disturbing to me for higher prices. So I want to see it still make reference to this level here before we start trading higher. So that is 850. So the fact is we're still inside this inefficiency, and it's right about now that I want to see it start trading higher. So the reason why I'm not buying, I'm not really interested in that buy at 800 is because of that gray area. And you can see how the wicks are reacting to that. We opened up this candlestick here, tried to run into the midpoint of that wick. It's being compressed and then came and closed right there. We've opened there, we're trading back into that area right now. And if we're gonna go high, I wanna see it being pushed through that area and outside that inefficiency. And you can see it's kind of like a rejection off of that level, the midpoint of this inefficiency and the midpoint of this week. But I like the fact that it's keeping up with that higher pricing. Well, that's a nice push into that 803. So price is getting away from that inefficiency now and not higher, it's going lower. So we're trading around that 800 level. That's 786 now. Well, now that we've pushed outside that inefficiency, I want to see how it reacts after taking out this low here. And most importantly, that bullish order block. So the 5 minute is gonna, this 5 minute candlestick here is gonna close in less than in a few seconds. Actually, we actually closed it. And one thing we've done now, we've closed outside this inefficiency. So what does that tell us? We are most likely to trade back into this order flow here. Not that we traded outside that inefficiency, that 800 level is not really a viable level to be a buyer in. And now that we've done this here, we can still trade higher, but I can still expect price to trend to that on the block. But this is just difficult right now, and it can make somebody who is new, somebody who does not really know how to trade these inefficiencies, it can make you very impatient, and you can just end up doing things that you don't really expect to be doing. So we're gonna open up London in less than 4 minutes. And to me, when London opens up, there's some volatility that comes in, and that volatility, expecting it to trade into this order flow here first, and then maybe we can start looking for higher prices. Now that we've closed out at that inefficiency, you can see how it's making reference to it now, and I can only be interested in buying it if we get out of that inefficiency and that trade higher. Otherwise, I'm expecting to trade into this order flow here, and then we'll be looking for higher prices. And if especially it respect this bullish order block, then we can be buying that 800. If it comes back to that 800 level, expect that 824. If it doesn't, we trade to the lower portion of that level here, then we might entirely be trading into this new week opening up. So if I were to be in on a trade on this 800 level, my mind could have been like, maybe it's a nice buy, but maybe it's an early buy. And in my previous trades, like yesterday, something that I really need to grasp is my entries. It's really my entries, and from the previous trades that I've entered, sometimes I enter early, and price goes just against me, and I cannot take it. Then I get out on a loss, and then if I wait 5 to 10 minutes later, gets back up to that price point that I was supposed to be buying it, and way goes way beyond that price point that I was looking to buy, and even goes to my targets. So I've learned that the hard way, and through experience. That's why I cannot trust this inefficiency here, and that's why I'm referring to this bullish order block. We might make a reference to that and maybe now start to trade higher. So if we trade lower here, I want to see it just jump into that level there, and then we're going to be looking for a buy going into London around 905 to 910. You might be looking for a buy if it will be interested in still going higher. So if I were to be around that 800 buy, so I'll be in a drawdown of now 10 points, and that's just something that I want to be avoiding. So there we go. We closed outside this inefficiency. That to me is weakness. We've opened up that candlestick here, made reference to that inefficiency right there at 800, and now we are back on at what, 782. That's 780 level, and you can see how it's trading now. So after about that bull shadow block, I really want to see it at the halfway level and close below it. Let's look at that range. It's right there at 780. So right there, and that's why we've closed, and look at how it's behaving. So we've opened up in London. So the last point of action is there's inefficiency here. So if we are entirely bullish, I want to see it start to run higher, and I'll be buying that 800 level to facilitate those higher prices. But if it's bearish, then we'll go over through this here and start to trade even a lot more lower into the current new week opening gap, and especially this midpoint. So if it does that, I want to see it just run lower, and I'll be looking for a sell around that 780 level. If we close outside that inefficiency and trade back up higher, then I'll be looking for a sell into that midpoint. But this here, this is just weakness. See how we ran into that bullish other block? That's weakness. So inside that inefficiency. So if I were to be a buyer on that 800 level, this could be a very major loss. So I could not bear this because now we are 770, those are 30 points. And you can see how it's trading into that new week opening gap. And I talked about this new week opening gap and said that it acts as a magnet for price, especially that midpoint, that 744 level. So we've gone through that level here, that inefficiency. We've touched that open from Monday. Look at how it's behaving now. So most importantly is the body here. So we stay on the upper portion of that body and then start trading higher. Then I'll be looking for a buy around that 780 or 800 if we still have an ability to start trading higher with the higher prices. But if not, if we close on the lower portion of this body here, then we start trading back up higher. We'll be looking for a sell around that 780 level. So if we close below this inefficiency on the lower portion of that inefficiency in a few seconds now, I want to be annotating this as sell side, and this candlestick low is 749, that's around 750. So anywhere from around 780 to 770 sales are good to facilitate those lower prices into this. But let's see where we close in a few seconds now. So that's one PDRA here. This is the second PDRA, that gap. So we've obviously gone through that order block. Now we are trading that inefficiency. So look at where we close. So this can just be a dip to facilitate the higher prices. So we've not closed on the lower portion of that inefficiency or outside that inefficiency. So let's wait whether we'll see it start to trade higher, or we'll reach into this inefficiency here and then use that level again to facilitate the lower prices that I've talked about. So I guess today we're trying to find a trade in London. So that is the time is 9:06. So we've had again this macro here that starts at 8:50. You can see we opened up on the lower portion of this inefficiency, try to trade into that gray area that I was talking about here, and then what do? We have this movement lower. We open up in London, that's a 9 here, and then we have this run lower. So between the midpoint of this inefficiency and the midpoint of this main threshold of this order block, again, that is the gray area. So we're going to be interested in whether does price have an interest to run lower, or do we have the ability to continue with this momentum. And this can only be achieved if we trade back up into this inefficiency. Then I'll be expecting that buy side. Like I had earlier on stated that we're going to buy that 800, then we might run to that 800 and run that high. If we don't, then that new wick opening up at the midpoint, they're on the crosshairs. And for that to happen, we have to run through this inefficiency and close on the low. That to me is weakness, and we're going to be running into that 750 level. And I think that's what price is interested in doing. So price is in itself, it has not even reached into this CB here. Now that again we have two PDRAs here, we have this CB together with the open of this bullish order block that can act as inversion. My interest is how we trade through that. If we go through that and trade back into that inefficiency, then we might be bullish and trade into that 824 level. If we don't and trade through this inefficiency here, then that midpoint of that new wick opening gap is the interest on price action. we've closed right there, made reference into that inefficiency. So let's see whether this will be a viable higher high to facilitate the higher prices. So we've touched that order block opening price. So yesterday I talked about how we're gonna be looking for PDRs that are gonna act as premiums or discounts. And today is just one of those days that I'm also looking for these PDRs to act as either one. So this can be a premium for lower prices. Now that when we go below it and we expect price to trade into that midpoint of that new week opening gap, then that's a premium. And that's the deeper premium that we acted upon right there after we opened up with that 750 mark 850 macro right there, and then they pushed it lower. That's significant. Opened up at 855, touched it right there, pushed it lower into these lows here. So I've talked about this inefficiency here together with the opening that I highlighted as a bullish order block. If we were really bullish, then I was expecting price to touch that high and then start moving higher, but instead we went through it, and you can see the closing price. So price is going to remain inside this range here for a couple of minutes. So I've talked about how I'm expecting, if I am expecting lower prices to trade into this new week opening gap and this mid gap, then I'll be expecting price to go through that inefficiency, but it has not done it, right? So what are we expecting? The momentum is bullish. We're having higher highs, and this is a higher low. So the momentum is bullish, and I've talked about if we are really bullish, I want to see price go through that inefficiency, refer back into that inefficiency, then we'll be interested in buying again that 88 level and to facilitate price to trade into that 824 level. It's just simple as that. So you have to wait for price to give you that signal, and so far it has not really given me that signal for higher prices. So far it's reacting here well for the fact that we can have higher prices, but we must also see if this PDRA is it going to act as a premium, so that it can also facilitate lower prices, on which it can. So I want to see price go through it, and then we'll make a reference to that as a discount array, then we'll be buying it trading to that 824 level. If it does not do that, then we might as well trade into this low, this PDRA, close below it, price will come back and it will be acting as a premium PDRA to facilitate lower prices. That's it. That's what I'm waiting for. But I'm more bent on the fact that the momentum is bullish and I'm expecting higher prices. That would be even better. So what I'm expecting and what price is going to do might be two different things. And I'm waiting for price to do something so that I can be trading it. I'm not just gonna go into a trade just because I think it might do something. No. So you can see we have closed with this 5 minute. We're still inside that inefficiency. So this is just not going anywhere for me. So far, I'm expecting these higher prices still. As long as we can be doing all this here, I'm still expecting price to start referring into that inefficiency and maybe run into that high and that. But again, as said, if we start running lower, close below this inefficiency, then I'll be looking for lower prices to trade into the current new week opening gap and especially that consequent encroachment, that midpoint. I was really expecting price to run this buy side here while we're trading here. And once we form this inefficiency here, I talked about it, how it is important to annotate and how it's gonna tell us the narrative in price. Now that we have that level there, together with this buy side here that I talked about, I was expecting it to act as a medium to facilitate higher prices into that buy side. But price spent a lot of time inside that efficiency, and that's why I was canceling at my interest on that buy at 800. So we are literally in London Open right now. We've made a reference to that midnight New York opening price on that inefficiency. And now let's see whether they will push it into that and into that buy side. So we're trading around 790s now. So we're remaining with 2 minutes, and then I'm gonna close with this 5 minute. So we're pushing higher, 790s now. So now with the fact that we've had price behave here like this to me is bullish. But I want a confirmation that I want to see it trade into that inefficiency because we've gone through that bullish order block right here. But we all know how price can behave. It can just give up the ghost and trade lower. Now that we've had that inefficiency, right from that inefficiency, we've had this gap right from that inefficiency, and we had this run into that on the block, that inefficiency, and look at the bodies. So that's why I'm so skeptical about the higher prices. So from Asia, everybody has been bullish, right? Everybody has been bullish. We came here after midnight New York Open. We wanted to be bullish. Well, there's a new confirmation on higher prices. Gone lower. You can see the reference here, higher prices. We went through it, and that right now is a nice run higher. So I want to see how this inefficiency now facilitate those higher prices. Do we run and touch it and then reject that, or do we run through it? And this now can be the more deeper discount PDRA, and this can be a discount to facilitate higher prices into 824. And that's what I was just looking for earlier. So I was talking about these higher prices from Asia. Everybody's been bullish, and we made higher highs. So the momentum is bullish. Going into London, we've met this run lower, taken out these relative equal lows here, but you can see the bodies are closing on the proportion of that I highlighted. So the next point of reference is that inefficiency. Do we trade through it and the bodies close above the midpoint? If this closes above that midpoint, then I'll be looking for that 800 buy. So far it's keeping up with the higher prices. So we're still trading around that 798 level, that's around 800. So I like the fact that they pushed it higher from right from this open, pushed it high into that inefficiency. That was nice. Well, that's nice. That's very nice. So we've done what I'm looking for. So we're gonna be buying that 800 level. um, buy that 800, expect higher prices. So I want to see price remain inside that inefficiency. Now that we've made reference to that, I want to see it remain inside that inefficiency and then offer higher prices. Some motherfucking grinder. We're just trying to build something. So let's look at this position here with this. Yeah. Right here. So my entry price is 801. We are down 10 points or so. So again, I've said I'm gonna put my trust on momentum now that we've had this reach into that inefficiency. That's not really like is powerful enough to facilitate the higher prices. I wanted to see this candlestick here close on the upper portion of that inefficiency. It didn't, and then we've had this rejection here. But I'm still interested in seeing higher prices. So look at that. That's not really interesting. That's not really nice. We've had the open here, touch that inefficiency, and then the rejection there. So last point in price action that I want to see is the middle point of this order block once again. So if we go beyond that, then that will be it for that trade. So the midpoint of that is right here. Right there. That's 780.76. So if we go way beyond the upper portion of that bullish order block, that's it for me with this trade. So far, I'm trusting the bullish prices. I don't want to see it push away from that level here and start trading into that level. So you can see whatever it's doing here. We closed right there, had this down close candle. We've opened up, touched that level, that the yes buy side that I was looking for. We've touched it, and then we've had that rejection into that bullish order block, and then now it's trading higher. So this so far is it has been from 800 preferably. So the low here is 782.45 of this candlestick. 782 from preferably that 800 level. 782 is 18 points. Yeah, from where I bought it, that 801 level, that is 19 points worth of a drawdown, and then it's back up into that inefficiency again. So again, I've said I want to keep my trust in these higher prices, and now that we've did this here, the body stayed on the proportion of that inefficiency, so then I'm expecting higher prices. So we've ran into that inefficiency. Price has not really closed on the upper portion of that inefficiency. Let's look at that more closely. Look at that. We just went higher, touched that level. I wanted to see it close, preferably on the even on the outside of this inefficiency, but it did not do that. And then we had this candlestick here lower, trade lower. So now that we've done this here, I'm still anticipating price to start trading into these highs. So we're going to be watching this here to just clearly see it better. So that position of mine is right there. And I've said I don't really want to see price go to the lower portion of this order block. I mean, it might, now that we've had this not close on the upper portion of that inefficiency, we might be trading back down into that bullish order block and even go a lot more lower. And that's not something that I want to see. So if it does that one more time, I'll be exiting that trade and looking for an entry into this midpoint of this new week opening gap. So another thing that is of interest is we've opened up this candlestick here run higher, touched that midpoint of that inefficiency and then rejected. Um, that's a tenet of lower pricing. That's a clear tenet of lower pricing, or the facilitation of higher pricing has not come into the marketplace. Just that reaction, this reaction here, that's a tenet of lower pricing. So we've not gone into the mean threshold of that order block, and I think it's gonna go right there now. Boom, see that? So that's really it for that trade, because this is weakness. So this entire weakness, we've opened up, touched that level, is trading lower, back into this inefficiency. So that's really it for this trade. We might be trading a lot more lower now. So if we go below this inefficiency here and close outside that inefficiency, then I'll be looking for the lower prices. So that was a premium array. So it has facilitated lower prices, trading back into this bullish order block, that mean threshold, we've gone through it. And now I want to see price close outside that inefficiency. So most part of London session is mostly difficult. You can see how difficult it is. After we opened, ran back into this order flow here, was expecting higher prices, but we did not get that. We've ran back into that inefficiency, and you can see there where we close, and that reaction from that midpoint of that inefficiency, that a clear sign of an inversion fair value gap. And you can see it has facilitated lower pricing. So we're remaining with 1 minute with this inefficiency, and I'm expecting it to close on the lower portion of that inefficiency. Then we're going to be trading into this new week opening gap. So the reaction from that inefficiency, that's what is making me switch my bias. You see where we've closed? we've closed outside that inefficiency, the midpoint of that inefficiency, so that is weakness. So we're trading around 772 level, so I want to be going on a short around that 770 level and expecting weaker prices, trading into the midpoint of this new week opening gap. So I've gone on a short around that 770 level. I'm expecting lower prices now that we've gone away from that premium. I'm expecting also price to price lower, and especially into the midpoint of this new week opening gap. So earlier on I talked about why I will be interested in this sell side here. I said I want to see price close on the lower portion of that inefficiency while we're trading here, but it didn't, and now we've gone into that. I've tried to buy it not knowing that I'm offside, and now we had that rejection from that level. So that inefficiency here is a non-negotiable. Now that we've done this, we've closed outside the midpoint of that inefficiency. So what is it aiming for? That inefficiency together with this week, and most importantly this sell side. So this buy side here can be used for later, but now I'm interested in this. And what's making this sell side more interesting is the fact that just below it is the midpoint of the current new week opening gap. So I'm anticipating that run into that level. So we've gone below that low beautifully. So what I've just showcased here today is my mistake from reading this inefficiency here and going on in on a long, while it's very clear that it does not really have an interest in going long and we're going lower. And it's clear from where we closed the midpoint of that inefficiency that they pushed it lower. So my interest is that sell side, most importantly the midpoint of that new week opening gap. So I've lost 48.38. These are how many points are there? So from 801 to 776. We'll pull up a calculator here. That point is 801.1. 801.1 minus 776.95. 0.95, then that are 24.15 points. So I'm expecting 24.195 from where I've sold it. That's 770. 24 points, 25 points from 770. Say 30 points. 30 points is to 740s, and that midpoint of that new week opening gap is 744. So we're going to be trading through that into that sell side and even lower. So we are trading at 759 now. It's keeping up with the lower prices. So I want to rotate the midpoint of this week here. I talked about it earlier, and is exactly the midpoint of that inefficiency. So that level, we can have price have like something like a bump before it goes into that sell side. So we've touched that level there. It can bump there, or can just open up and then trade lower, but I want to see it kind of like it's like a speed bump. And where can it trade it to? It can trade to this inefficiency here, so that it can facilitate more sales. But the best case scenario on how new week opening gaps behave, I want to see them dump it. So you can see how we've not really spent a lot of time inside that inefficiency. We've gone through it. And you can see the reaction from the midpoint of that inefficiency right there. So this is an interest of lower prices. I misread that and then I went long right there and around that 800 level, and you can see it went against me and I've lost something. So I've adjusted my bias just because it did this here, opened up, boom, hit that point here, and then facilitated lower prices. Said that bullshit block that I was looking at earlier, very small, run higher. You can see the facilitation of lower prices. We've opened up here, we went short here, looking for lower prices, and I want to see it now run to that sell side. And most importantly, the midpoint of that new week opening gap. So this has been a very interesting session. What to look for from pre-London going into London, and the change in momentum that we've seen here. So you can see that price point here, I was talking about it, gonna act as a speed bump, but I'm still waiting for price to trade into that sell side and the midpoint of that new week opening gap. So what can be a deal breaker for me with this entry here? If price start to trade into this inefficiency here and close again with the bodies on the upper portion of this inefficiency, then that will be a deal breaker for me and we'll be calling it a session. But I don't really expect that because I know how price trades with this new week opening gap. So you can see where we've closed this candlestick here with a very small bodied candlestick. We've left an inefficiency here. So the deal breaker for this trade here will be if we start trading higher back into this inefficiency and close on the upper portion of that inefficiency, of which I don't really expect, then that will be a deal breaker for me for this trade. Otherwise, I expect it to maybe touch inside this inefficiency here and then offer the lower prices. So we've started the 950 to 1010 macro right here on this candlestick. So that macro, I want to see it run lower into the midpoint of that new week opening gap. So price is still trading with this at this speed bump here. I've mentioned what I will do to cancel out on this trade. Otherwise, I'm expecting it to run into that new week opening gap. So we're trading back into this inefficiency again. So what I want to see from this inefficiency, I want to see it reject from this inefficiency and start to trade lower. Note that that inefficiency is right there on top of that new wick opening gap. I don't want to see it go way beyond that price point, the midpoint. I want to see the bodies remain on the lower portion. If the body is closed on the upper portion of that inefficiency, then we have a problem. So I want short on that 770 level to expect 750. This candlestick's low is 754, was so close, but I want to see a rejection from that inefficiency. If it does not do that, then I might as well be wrong and I might as well be outside that trade. So the time is 7:58. We have 2 minutes until that 10 o'clock hour. That's almost the middle of London. And from what we've seen here, I was expecting that buy side to be traded into, but what prices shown me here, and that's why I'm looking for lower prices, because we have this current new wick opening gap, and that midpoint of that gap is going to act as a draw to price. And just because we've done this here, we could have had this momentum from this inefficiency here and gone into that buy side, but we didn't. We started trading lower back into this inefficiency here. I talked about how I wanted to see a lower prices now that we went to the mid threshold of this order block and went beyond this inefficiency, but not with the bodies. And then we had this retracement back into this inefficiency that's supposed to be acting as an inversion fair value gap. And you can see the reaction from that inefficiency right there. We closed exactly on the midpoint, opened right there. We did not trade to the upper portion of that inefficiency, and then we had this rejection. The next candlestick here, we open, trade into that mid gap, and then they push it lower. And that to me is lower pricing. So we had this movement lower. I wanted to see it trade into this new wick opening gap. This is a deal breaker for me. This is a deal breaker for me for that trade. So look at what it's doing here now. We've had a major push into that high. So that 10 o'clock 5-minute candlestick is going to come into the marketplace, and I'm sure we're going to close there with just a few seconds from now. And if we close right there, that's a deal breaker, and then we're going to exit that trade right there. See that? So that's really it for me. We've tried today, and I'm going to exit that now. Even though we can trade lower, this is just not going with the way I'm expecting price to behave in. And you can see the trades here, and you can see the trade went long here, went back lower. I called it, if we're gonna trade below this inefficiency and close below it, I'm gonna go short. Went short here. I did not really want to see it close on top of that, anywhere on top of that inefficiency, and you can see where we close. So those are the two opportunities that I've had this London and pre-London session. So going forward, honestly, I don't really know what interest in price is now, because it's neither interested in this sell side, it was not interested in that buy side with the way it behaved here. So sometimes you're gonna have much difficult trading moments like this, and today is one of them. I know at the end of the day, price will trade to either one of these liquidity pools. It's just that I cannot predict it now. I don't know which one, because it has not been able to hold one end of the deal with these tape reading ideas that I have. And sometimes you can just be wrong. So I think that's really it. This recording has been way overboard, 2 hours and 2 minutes. So until tomorrow, we're gonna look for another reason to be trading. So until then, adios.